But yes, it is true. I did suck at supply and demand trading when I first started. But over time, I did notice these key little differences between my winners and my losers and who actually makes money in this trading strategy. And I'm here to share with you what those common things are so that you can start making money. I've been doing this for over 9 years, looking at thousands, tens of thousands of trade reviews when it comes to this trading strategy. I know what works and I know what doesn't, and it freaking drives me crazy when I see these delusional idiots talking about this strategy when I know they are losing money for a fact when it comes to this trading strategy. They're recommending things to traders. I'm like, this 100% doesn't work because I've tested it a million times and they're using far less parameters in their style and they're losing money. I just know. So hey, I'm just gonna bring it to you guys about what these common things are about what you need to implement. All right, so let's get into it. So the first thing that we need to break down is the concept of imbalance. And every single zone that you see me trading at is going to have a 2-to-1 imbalance. The whole concept of supply and demand is to identify where the big money is buying and selling at. So we want to make sure that we are trading at super strong imbalances. So in this case, we have a very nice supply zone. And you'll notice here when it comes to the significant imbalance, these leg out candlesticks are going at least 2-to-1 the size of the base, okay? There's a reason why we need the imbalance being 2-to-1 the size of the base, okay? That is the first thing. The second thing that is important is we need to qualify this zone to be a good zone. Every zone here, in this case, this supply zone, this little drop-based drop supply zone, look at it on the big picture. It's removed, look, it's not just a generic supply zone. It's removed demand, support. This major support line, it has blown through it, okay? So now traders are going to be looking at this as a breakout retest. Also, support now becomes resistance, and it's also a supply zone in a downtrend. So there's a lot of reasons. We're stacking up reasons of why this is a good zone. It's gone at least 2-to-1. It's removed an opposing zone, broke structure, continuing the trend down, okay? We are qualifying this to be a tradable zone, all right? And so that's why this all comes in to being number one. The number one point that we're talking about is qualifying a quality zone, whether that's a technical approach, breaking structure, but it needs to have at least a 2-to-1 imbalance. A 2-to-1 imbalance, and it has to have a quality tradable zone. Okay, so that is the first thing that a good supplier demand zone is. The second point that we need to talk about is the concept of profit margin and clean arrivals. So this is a trader that is in the Moneyball trading program. He's been in the group now for 2 months and he has taken just over 30 trades and he decided to do a review. What he noticed is that he has super clean arrivals and a very strong imbalance makes a massive difference in the win-loss rate. What did I just say in number one? The imbalance is number one importance, okay? Number two, clean arrivals. We need profit margin. If there's no profit margin, there's no trading opportunity, guys. If you see opposing zones being created, it's blocking our profit margin. I've done videos on this in the past and we're going to break it down, but we're going to look at this guy's results. But he joined 2 months ago, and that's the whole goal, is we're trying to turn traders into profitability in 90 days or less. So within this first 2 months, he's gotten his 30 trades. We're going to do a one-on-one review, but he's done a quick review and he noticed clean arrivals and super strong imbalances makes a massive difference. This is literally what I keep talking about. It is clear that we're waiting for clean arrivals and strong imbalances that yield the best results. Both on the multiple time frame setup and the single time frame setup seems to be working well. Okay, he is up 6% since he joined in the 6th of December. So 2 months, going for 2-to-1 reward to risk, 30 trades. Hey, that's phenomenal, guys. That's what we're trying to do, is take struggling or brand new traders to profitability in 90 days or less. And this is a guy that is definitely going to do it. He's doing it. He's already making bank, so that's awesome. But that goes back. So let's talk more about clean arrivals. So here it is, talking about clean arrivals. This is a common thing that's covered in the whole course material. But most traders will notice that clean arrivals work better than poor arrivals. Okay, so what is it? So here in this case, we have 2 examples, one clean and one poor. Notice here on the left, This is his demand zone that he has down here. Super strong imbalance. Remember, number one, super strong imbalance. Notice here how prices come back into our zone like this. It comes straight back into it. Versus, notice how before it comes back into this demand zone over here, prices drop and then it just bases out sideways. That is blocking our profit margin. If there's no profit margin, there is no trading opportunity. This has been reviewed by over hundreds of traders, and 90% of the time they come back to me and they say, yeah, statistically, there's quite a big difference. You guys remember Jam Laveau? That's actually something he was reviewing. This guy took 33 trades, 60% win rate, which is awesome. But look what he noticed. When he has a clean arrival going for 2-to-1 reward to risk, it's a 65% win rate versus a poor arrival is a 52% win rate. Clean arrival. All right, we can see this trade that Eric just took. Notice how prices come straight back into it, all the way down like that. That's what I want to see when it comes to clean arrivals. All right, no profit margin, no trade. And so the third point, let's get on to the third point now. The third point is understanding that prices turn inside out. The concept of confirmation. This was a massive light bulb moment in my head. We need to understand what price is doing on a higher time frame, and we need to wait for evidence of buyers or sellers stepping in on a smaller time frame. So I believe on my watch list I posted pound yen, Aussie yen, New Zealand yen. We all have the exact same setup reacting off of daily 4-hour demand plus confirmation. So this was a setup that I was sharing. And let's just look at one of them. New Zealand yen, I think we said, no, pound yen or something like that. So was it Aussie yen? I don't know. Yeah, so in this case, Aussie yen, we start off on our higher time frame and we noticed that prices were coming back into this 4-hour demand zone. Hey, going back to lesson one, guys, mistake number one, or making sure that every zone has what? A 2-to-1 imbalance, very strong imbalance to the upside, all right? Remove the opposing zones, it's gone over 2-to-1, it's broken structure, that's perfect. Prices coming straight back into my zone, that's what I like, okay? So when prices come back into my zone, I then go down to a smaller time frame. In this case was my 15-minute, and we have a downtrend. We have prices making lower lows and lower highs, right? Well, that's perfect. We are located inside a higher time frame demand zone, and we just received confirmation of price turning inside out. So you guys understand that, right? So if prices are coming into a higher time frame demand zone or support, whatever, that's how prices are going to arrive into it on a smaller time frame. It's going to be in a downtrend, right? But what we want to see, prices turn inside out. So what we're going to see on a smaller time frame is we're going to see downward trend lines being broken and these opposing pivot point zones being removed. That is what confirmation is, all right? That's break of structure. That's price turning inside out. This whole area is confirmation. And I've done a massive video breaking down this is how markets turn from inside out. All right, prices turn from smaller time frame to larger time frame. So we have price inside a 4-hour higher time frame demand zone. And on the 15-minute, if we are inside a higher time frame demand, the trend has to be in a downtrend, making lower lows and lower highs, right? So what I want to see is prices breaking to the upside and removing those opposing zones. And just like that, that's our setup that we buy the pullback back into this as demand. All right, we buy the pullback and we're absolutely laughing to the bank, ladies and gentlemen. How many times have you laughed to the bank in your life? Try it out. Go to the ATM and just chuckle. It's fun, it's entertaining. I want you to do that sometime, all right? Go take that money out from your trading account and laugh to the bank. It's actually quite fun. Why are you laughing? I'm laughing to the bank, right? It's contagious. It's contagious. So that was definitely a light bulb moment when it comes to my trading. I think Eric took that same trade. Sharon took the same trade. Alosh, yeah, everybody was getting in on those trades. It was a nice setup. Price inside higher time frame demand. That's how price turns. It turns from inside out. I've done a video breaking down that whole concept. And you know what I find amazing? People like tell me like, the course video that I made talking about the supply and demand methodology, I get a lot of people feedback saying, dude, I paid some guy like $1,000 and your free video explained way more in detail than what I just paid $500 or $1,000 for. So hey, that is a completely free course video if you wanted to learn more on the supply and demand trading strategy. But the last thing that we wanted to talk about is the importance of review. You see me looking at these trade reviews. You see me doing these, looking at these guys' reviews and their back test, right? We need to review to see what's working and what's not working. This is why after every 30, 40, 50 trades, we need to review our trading and notice little market changes, notice what's the difference between our winners and our losers. This is a key thing that every profitable trader that I know, and that's why documenting your trade, back testing, and reviewing is how you grow as a trader and you build confidence in your trading strategy. It's just a fact, all right? It's an absolute fact. We're gonna look at one more as an example. It's the same thing when I was looking at, not the UK, it's the same thing when I was looking at the US 100 this morning for this buying opportunity. I saw that this was a demand zone, all right? Rally-based rally demand zone that broke downward trend line. Very strong imbalance to the upside. You see that? 2-to-1 imbalance. Removed an opposing zone. Broke trend lines. Clean arrival. Price coming straight back into it. Okay? And I'm trying to buy the confirmation as it's turning to the upside. You get the clean arrivals. You get the confirmation. You get prices inside these quality zones that actually accomplish something. It will turn your trading around. And of course, make sure you journal the trades and review to see what's working and what's not. And you see me in the Discord looking at these guys' trade reviews, looking at their back test or maybe their last 40 or 50 trades. It's something I do is I sit down with everybody in the program after they have 30 or 40 trades and we look at all their winners versus losers, right? How can we make a better trading setup? Okay, and that's what I'm trying to do is create consistently profitable traders in 90 days. So I would love to have you part of the program. If you wanted more on the trading strategy, you wanted a free ebook or a free training on why 90% of traders lose money and how to become a profitable trader and the steps that I would take, then you guys need to check out thatmoneyballtrading.com and I'll send you all that stuff for free. All right, guys, I appreciate if you guys like the video, subscribe. If this strategy does interest you more, then you guys need to check out my exact trading strategy setup in 10 minutes or less at the top of this video. All right, I'll see you guys in the next one. Cheers. Bye-bye.